What if I told you there's a mortgage strategy specifically designed to help families provide housing for aging parents or disabled adult children without automatically being forced into traditional investment property financing? Because here is what nobody tells you. Some of the most important real estate decisions families are making are not about investments. They are about care. They are about support. They are about stability. And they are about making sure the people you love are in the right environment financially and emotionally. But most families don't even know this mortgage strategy exists. Welcome to episode 250 of the Martini Mortgage Podcast. I'm Kevin Martini, a certified mortgage advisor, producing branch manager, NMLS 143962 with the Martini Mortgage Group at Gold Star Mortgage Financial Group Corporation, NMLS 3446, equal housing lender. This podcast is for educational purposes only and is not legal or tax advice. Now, with that out of the way, let me ask you something. Have you noticed how much family housing dynamics have changed? Parents are living longer. Healthcare costs are rising. Many families are navigating caregiving responsibilities they never expected to face this early. And sometimes the question becomes, how do we create the right living situation for someone we love without creating unnecessary financial pressure? That is a real conversation, not just what house should we buy. And this is where people get it wrong. Most families assume they only have two options: buy an investment property or pay cash. But there may be another path, a path that can potentially provide a low down payment requirement, a path that's more favorable financing terms, and a path with lower monthly payment structure compared to traditional non-owner occupied financing. That strategy is called the Family Opportunity Mortgage. Now, before we start getting overly technical, stay with me. Because the real value here is not just the loan program itself. It's understanding how strategic mortgage structure can create better long-term outcomes for families. And in a few minutes, I'm going to explain the mistake I see families make all the time when emotions and housing decisions collide. Here is the simple version of what this program is designed for. A family opportunity mortgage, or family helping family, may allow a borrower to purchase a home for an elderly parent who cannot qualify independently, or a disabled adult child who cannot qualify for independently, while potentially receiving owner-occupied financing terms, even though the borrower will not personally occupy the property. That distinction matters, because owner-occupied financing terms are often slightly more favorable than investment property financing. And this is where people just miss the entire opportunity. They assume the financing structure is fixed. It is not. The structure matters. Not a little, but a lot. Here is what nobody tells you. Mortgage strategy is rarely about finding a loan. It's about aligning the financing with the actual family goal. And those are two completely different conversations, aren't they? Because the wrong structure can create a higher payment, unnecessary stress, reduced flexibility, and long-term financial friction. And this is where many families unintentionally make things harder than it needs to be. Now, let me be clear about something very important. This is not a loophole, and it's not designed for vacation homes or general purpose investment properties. This is a very specific program designed around legitimate family support scenarios, which is exactly why understanding the guidelines matters so very much. Because the details matter, documentation matters, structure matters, and honestly, working with someone who understands the strategy matters too. Because this is where online mortgage advice starts to get very shaky and breaks down. Families start Googling, they read forums, they watch random videos, and they try to piece the information from 10 different places instead of creating clarity. They're actually creating confusion, and confusion creates hesitation. Here's an example. Imagine a family whose aging parents can no longer comfortably maintain their current home. Maybe the home has stairs. Maybe healthcare access has become difficult. Maybe the parent's income no longer supports qualifying independently for a mortgage. Emotionally, the family knows something needs to change, but financially, the uncertainty shows up immediately. Questions start flooding in like, can we afford this? What would the payment look like? Should we wait? Would renting make more sense? What if rates improve later? Those questions are just normal. But herein is the reframe. The biggest mistake families make is delaying clarity while waiting for certainty. Because certainty rarely shows up first. Clarity does. And this is where people get it wrong. They think waiting reduces risk. Sometimes waiting simply delays preparation. The families who navigate these situations best are usually not the ones with perfect timing. They are the ones who understand their options early. That changes everything because they know the payment, the financing structure, the qualification path, and the long-term impact. You stop making emotional decisions inside uncertainty. You start making strategic decisions with clarity. And this is where the conversation becomes bigger than a mortgage. Because this really is about control. Control over the monthly payment. Control over the structure. Control over future flexibility. This is what matters. Especially when you're making a family-centered decision that may impact caregiving, retirement planning, or long-term financial stability. Now, here's another thing nobody tells you. The best mortgage strategy should create breathing room, not pressure. Meaning the payment should feel manageable, the structure should support flexibility later, and the mortgage should align with the family's broader financial life. Because a lower payment is not just about affordability. Sometimes it's about reducing stress. And stress matters more than people admit. Now, let us connect this into something we talked about constantly here at the Martini Mortgage Group. The home loan first strategy. Most people shop backwards. They focus on the property first, then they hop into the financing work afterwards. That creates pressure, especially in emotional, sensitive family situations. But strategic families create financing clarity first. Then they move forward with confidence. That changes the experience completely. And this is also where our same as cash mortgage approval can become an incredible value. Because when the underwriting work is done up front, you remove a huge amount of uncertainty before decisions are actually made. You understand the numbers, the structure, the approval strength, and the realistic payment range. That clarity changes behavior because confusion slows down people, but clarity creates momentum. Now, let me give you the mistake I mentioned earlier. The mistake is focusing only on solving the immediate housing issue without evaluating how the mortgage fits into a broader financial picture. Because the right solution should not only work today, it should still make sense years from now. That means asking better questions. Does this payment support long-term stability? Does the structure preserve flexibility? Will this create unnecessary financial strain later? Does this support the family emotionally and financially? Those are the right conversations, not what is the absolutely lowest rate online? Because the wrong structure with slightly lower rate can still become the more expensive decision over time. And this is where strategy matters more than headlines. Now, let me ask you a few questions. If your family needed to create a housing solution for an aging parent or a disabled child, would it help you to understand all the available options before making that decision? Would knowing the real payment range reduce uncertainty for you? Would clarity help your family make a more confident decision? Of course it would, because clarity changes behavior. And the families who make the best long-term decision are usually the ones who understand their options before urgency forces that decision. That is the goal. Not pressure, not hype, just clarity. Because the family opportunity mortgage is not really about a mortgage. It's about creating a thoughtful financial strategy around an important family decision. And more families should know about this strategy because clarity creates certainty, and certainty creates power. If you want that kind of clarity for your situation, you can reach out to me, Kevin Martini, directly by dialing 919-238-4934 or schedule a time to talk. No pressure, just a conversation. If this episode of the Martini Mortgage Podcast gave you clarity, share it with someone who needs it and subscribe so you don't miss what's next.